Hi, I'm Ken Poletski with Community Real Estate Group Keller Williams here in Southeast Washington State. It is April and the first quarter of the year is in the books. It's been a good quarter. Better than last year, I'm going to tell you, and we're going to see the numbers. This is the monthly market report. This is not like my weekly market report, and I hope you're subscribing to our channel to get that report on a weekly basis. This is going to be an entire month and the year-to-date kind of volume report. And then we'll have a little bit of history of what we've been doing over the last several years towards the end of the slides, and to see where we're at in the recession. I got a cold, so I hope you can hear me well. Hope I don't cough too much. I don't have any water. Probably should have done that, but let's just jump in and see how things are going. Of course, we know that the interest rate is what has been driving our market recession, right? So what we did is we controlled it by increasing the interest rate, and it curbed the inflation and kind of slowed the economy down, right? And the booming economy, and hopefully we'll get that back. We have already been seeing signs in 2024 that buyers are getting comfortable in the new interest rate and started to make some moves. So as we jump into this report, we're going to be looking at the actives, which is our current vision of what the market's going to do. And we're going to be looking at the pendants, which is the now, what's going on, what's under contract, and then the sold data, which is our rear view mirror, which is what we do a lot of forecasting and planning based off of. So we've been watching a few things happen, right? We peaked in inventory in about November of 2023. In many, many years that I've been in real estate, we haven't had numbers as high as that. And we got up to 1,100. The graph shows 1,038 here, but we got up to 1,100 homes, right? And then we started to drop a little bit in December. Most of that is seasonal stuff where we start to drop off, right? And when we start to drop in January, we're 909, in February, we're 879. Then in March, we jumped up to 875 houses on the market. And then in April, at the beginning of April, we had 822. So what does that say? That just says that the market is fluctuating a little bit and the inventory is starting to drop. And when we know supply drops off, demand goes up and prices start to climb. And you're going to see some of that happening, especially when we get to the pendant properties of this year. And you're going to then notice in the sold data that it's starting to happen. And if it happens year or month over month, so if it happens month over month, that would mean that the prices are expected to be increasing this year. And hopefully the inventory stays up to kind of balance that out, right? So 822 active homes on the market as of April 1st. 348 of those are new construction properties. So we're still seeing a good balance of what the mix is for total market and new construction. Still a healthy number there with a little over a third of those being new homes. So the pricing piece, this is where we're starting to notice some things happening as well. We still see that the prices 2024 are lower than 2023. If you look at the April month, it was $582,000 average price for the homes that were on the market last year, the total market. This year it's $543,000. New construction, which we saw a real drop over the last year, you can see the light green number dropping and dropping and dropping all the way into December, where it dropped off to the lowest point. Is also down again this year with the dark red at $552,000. And on the bottom there, you'll see the chart where the numbers align. So we're starting to see that. It's been a trend throughout the entire year so far. It's been lower than last year, right? We've been noticed the prices had dropped and they continue to drop, but we're watching it real close to see what that looks like, because it's what's active is basically what's tested, right? So if someone puts their home on the market, they're hoping to get a buyer. If they don't get a buyer, they have to adjust price. If they put it on the market and it's priced well, they get a buyer right away still, right? Because the average days on market's jumped up a bit. We're 89 days average market for resale, 112 days for new construction. And as of yesterday, it was 88 days on the market, so that dropped a little bit more. So we watch that a lot, but when a home is priced really, really well, we're seeing them go off the market within a couple days. And so that's the important part. If you're a seller, price your home accordingly so that you're not having to chase the market with price reductions. If you're a buyer, get ready, get willing, get pre-approved, get everything, all your ducks in a row. And then as soon as something that hits the market in your price point, make sure you're ready to go. Make sure you have an agent on board. Make sure you're fully underwritten with your lender. We have great lender resources that we can refer to you. So if you need that, please reach out to us. We'll happily set you up, get you all pre-approved, and then get a wants and needs analysis to help you find out exactly what kind of opportunities are out there for you. The slide here you see right now is the pending property count, and you can see that that number has been climbing month over month all year long so far. The dark black is last year's, the light pink is this year's, right? From January all the way through into April, and a big push in April. We had 481 homes last year under contract. This year, 559 homes under contract. Already tells me that we're projected to sell more homes in 2024 than we did last year. And remember, 2023 and 2022 were drops from our big year of 2021. The new construction is 216, again up from last year at 176. So those are good tells. That means we have a good, strong market. Our buyers are comfortable. They're making purchases. The homes are priced well. If you're a buyer thinking, wow, the prices are just too high, this is telling you that there are buyers out there that don't agree with that and that are buying what you might have been able to get, right? So sellers, if you're out there thinking about making a move, this would be the time. This next slide, you'll see I put a couple big blue arrows on some numbers just to point out and reiterate. This is where we started to see the trend in March and in April. And this is the flip, right? This is when things started to flip. At the end of the first quarter, we started to see the prices from this year be higher than they were last year. And if you remember the active slide, if we jump back to that real quick and we show you the active slide and we saw those prices in that 582 and 543 number, well, now we're seeing it different. Now we're seeing 466 and 448, right? So we jumped up by almost $20,000. And in April this month, as far as the pending properties, was 435 and 459. And those, when they close, will show us a sold price. And prices of sold properties is how we base our comps when we price homes for our sellers to put them on the market, right? So we look at that. And what we'll see on the next sold slides, you'll see that it's already started to affect into this year. So if you imagine, if you will, if the prices continue to climb like they were year over year, percentage-wise, all the way through the end of the year, by the end of this year, you'll be paying, $20,000, $30,000 more than you were last year at this time, which is a shock because everyone's thinking, well, the rates are so high, I can't get out there and buy. So just be prepared. If the rates do drop, we're going to have a flood of buyers come onto the market. And if we have a flood of buyers come on the market, 822 homes on the market is going to disappear pretty darn quickly. And we'll be watching that real close. The pending days are actually lower on average historically anyway. This is a number we're starting to track. Resale at 49, new construction at 57. Those just mean those properties go under contract quicker because they're priced appropriately. They're not waiting or testing the market, or they're not something that's unusual to the market, something really high price or big acreage, or something really low price, a flipper or something like that might take longer. So the sold data, like I said, is what we watch to see where we're projecting for the year. And if you look at the first 3 months of the year, it was great, right? I mean, we did really well. The first 2 months, we actually exceeded last year by a bit. You can see that pink versus the light blue as far as the total market. In March, because we only have sold data through March right now, was 310 and 322 last year. So we're a little bit under there, but new construction was up. So we're watching that, and we expect May probably to pick back up in that. Last year we saw a dip. Well, you can see it here in the light blue. We saw a dip in April and May, and then it went right back up. And the market does cycle, right? Folks, if I can't share enough, the market's always cycling, but here's what it's doing. It's cycling like this. It's going this way, right? And these numbers is what I've used for years in my business to establish what I should be doing with my clients and how I should be advising and consulting with them in the world of either buying or selling real estate or looking at an investment property. So if you definitely have any questions, you can always reach out to me or put a comment below or subscribe to the channel. We'll be doing follow-ups on it as well. So as you can see from last year's pricing, we were at $444,000 on average in the month of March to the average of $457,000. That's our first indicator that the market increased. And if we were actually to do that math, we would actually be able to see how much of that was changed in a percentage wise, right? And if we check that month over month, we could anticipate that your property is appreciating at X amount percent per month, right? That's how we do it. And it's a good number to watch and pay attention to. Statistically, after 2020 and 2021 numbers blew us out of the water, we were 2 to 3%, probably 3% on average appreciation area, right, year over year. So we're watching that real close, and that is a number to pay attention to. The new construction number is still down from last year, which you can look at that dark blue number where it dropped off all of last year, right? And so far in this year, it doesn't look like it's changed too much in the new construction, although it is up a little bit compared to last month. But remember, these are sold data for the month and not for the year, so we'll average that out at the end. And it shows that every month has a different average because that is a price point that it was popular or came online or started, 6 months ago in the new construction stuff. Although there are builders out there now building in 90 days. So if you want information on how to get into a brand new home really quickly, I talked to one of our builders the other day. I think he's banging them out in about 90 days for the smaller product to get it from ground up to finish. So we would happy to help you in all of that. We are new construction specialists, and we have agents that are ready to take you around to all the different subdivisions. We keep a good accurate map of where those are located. Again, so if you have questions about that, just reach out to us and we'll be happy to help. Of course, the sold days on market, we're seeing that drop as well. Hopefully it continues to balance out. That's what we want, is a balanced market. I feel that the more balanced the market is for my buyers and sellers, the happier buys and the happier sells, and they can transfer, make laterals, or jump into the market. I'm working on a ton of first-time home buyers right now. And I highly encourage you, if you're a first-time home buyer, haven't bought a home, get in, give us a call. We'll set you up. We'll show you all the pieces to the puzzle. We will guide you through that path and get you hooked up with one of our great lenders right away and get pre-approved and make a plan. And that's the important piece of that, because we do know that real estate does cycle, and we're watching it happen right before our eyes. So let's look at the year over year, and we're already at 843 sold properties in the total market, 225 new construction. And this is where it does not pencil out like, oh, we're through the first quarter. If you multiply that times 4, we're not going to hit last year's total sales of 3,600. Well, here, let's go back a couple of slides and look at the arcing pattern. We're not even into our peak months yet, right? Our peak months are going to be June, July, August, September, maybe even May, where they start to arc. And that's real estate in general, because it's a market where we have seasons here in the Tri-City, so it gets cold, right? Or it's winter and people don't like to move during those times of year. So we're looking at that, and we will be jumping back in next month again to give you the new first month of the second quarter and see what those numbers look like. But if you have questions about what's going on, feel free to reach out to me. I'm Ken Poletski with Community Real Estate Group. We are a team at Keller Williams, which we're super happy with the company, and we're fighting for our clients every day to get the best prices on both sides of the aisle, whether it's a buyer side or a listing side. Thank you very much, and talk to you soon.